be 80, 90 points higher from here. So let's see how that goes. But I think we're bracing ourselves for an exciting 60 minutes.
Well, let's hope so, right? On the positive side, because I think you're already down 300. The only way to go, direction to go is
hopefully,
up, right?
Hopefully. We were down 400 a few minutes ago.
Yeah. Okay, well, let's just quickly tell you what's lined up here in the last 60 minutes of trade. So it's, of course, the monthly expiry, and it's red across the board. AI disruption fears assuming center stage once again. IT, of course, is the focal point as far as that sell-off is concerned. And we got Rima joining in with some more numbers, some more stats, and what's the market making of it, because it's like a moving target out there. In terms of textiles, it's a bit negative, and there is a notification basically which says 50% reduction in some RODTEP tariff rates across some lines immediately, and that is the reason why Gokul Das, Arvind, Wellspun, etc. are reeling under some selling pressure. So that's the view, and that's where we are at. You know what we're going to do is just get you the F&O set up before we go any further. It's the monthly expiry, as Nigel said. So where do the numbers lie, and what's the positioning like? Nigel, take it away.
You know, the rollovers are taking place both on the Nifty as well as in the Nifty Bank, and both of that is pretty much in line with what we have seen. So we'll keep that aside. The IT sector, now that's getting very, very interesting. The index itself is down more than 20% in this series, in this month itself. You know, in February, the Nifty IT Index is down close to around 25%. But I'll tell you what, you know, it's getting a little bit very excessive on the downside. And I say that the open interest is up between 50, 60, 70, 80% as well. So we're seeing aggressive shorting on the index itself, with stocks down anything between 25 to around 35%. You'll require to see some kind of positive news flow that comes in there, or maybe excessive cash market buying to push the stocks further lower, because otherwise it's getting very, very excessive. When you see open interest swell up by around 50 to 90%, and you see an index, the headline index itself down by 20%, I think something's got to give on this one. Let's see how that goes. The PCR, that's come down to around 0.81, but that's getting to expiry, so we'll keep that aside. But now giving you the two strikes that are fairly active. 25,400 call. The premium is down by close to around, I think, 80, 90% approximately. Start of today, it was more than 200 rupees. It's come down to around 33 rupees. Very, very important. And that's why, you know, we went dancing away to around the 25,460, and we did a bit of a U-turn in the last few minutes. So that's the important mark to look at. On the downside, 25,350, the put as well is fairly active. The premium was around 20 rupees. That's come down to around 7 rupees. So, you know, your important level to track on the downside, coinciding with the writing that we're seeing at around the 25,350 put, is ballpark today's low, which is 25,328. Very, very important. On the upside, 25,500, 25,460 is the important mark in terms of resistance. So I think we are in that range. If you see a break off either of those levels, we'll see a quick 50, 80 points move just in the last 60 minutes. Just quickly to run you through a few stocks. Eternal, that stock is coming for fresh shorting, aggressive shorting actually, and the rolls as well are on the negative side. Polycab, beautiful move out there, big recovery. Talk about the markets being under some pressure. That's making a fresh 52-week high, and there's clearly a short squeeze that's coming out there. Remember, shorts were rolling over their positions. I think there is some long build-up, and we are seeing fresh buying on Chola investments as well. So brace yourselves. The final 60 minutes, I think it's going to be very, very interesting. Brace for an 80-point move from here in either which direction.
Well, that's pretty exhaustive, and that's the positioning as things are. So exciting next 60 minutes, as Nigel put it. Well, let's just quickly run you through what you should be doing in the last hour or so. Mitesh is with us with that advice. Mitesh, good afternoon. Good to have you here. You know, 2 steps forward and 3 steps back, but in the range firmly. What's the sense, Mitesh, and what should one do?
Yeah. So, Prashant, I think, you know, saying that, you know, we have been like going up and down, and I've been maintaining that we'll possibly just chop around between 25,400 to about 25,800. Now we are at the lower end of the range, which means that there's danger of breaking below that. If that happens, then I think, you know, we might go around to about 25,100, maybe in the worst case scenario, 24,950, 900 zones. But I think, you know, the overall trend on the medium charts is still not very clear. So my sense is that it could yet be a bearish push, but we might get, and again, you know, we might get support around this 24,950, 24,900 level. So I think that's the downside which traders can pencil in the negative case scenario. Of course, 25,400 still is not broken on a closing basis, but the way it's shaping up, and also given the fact that the Bank Nifty is slightly negative today, showing first signs of profit booking, you might see some deeper pullback. Having said that, I have one buy and one sell call right now. On the selling side, I have a position on, or I have a call on Hoodco, which I would recommend selling with a stop just above levels of 190 to 193 and a target of around 180 or just below that can be looked at. And on the buying side is your FMCG name, which is Marico. It was a call earlier as well, but even now is showing strength in a falling market. So Marico is a buy with a stop at 798 for targets of around 830.
Okay, got it. Mitesh, very quickly, wanted wanted to get your view with regard to Polycab. I recall the promoter entity came and sold. You had fears that there's excessive competition. The stock actually has done very, very well. Levels you're looking at on that one?
Yeah. If you look at the chart of Polycab, this is one stock which has done well in this entire corrective market and has made a fresh swing high. The earlier highs were around levels of 7,800 to about 7,750. Now, getting past that typically means that one, that level becomes your key support area, so should not be broken. And two, I think that should give you fresh upsides. The extended targets over here come at levels of around 88 to 8,900 with a minor pivot at 8,500. So I think these are the two targets, but I suspect the stock has the strength to go to about 88, 8,900.
Okay, all right, got that. Thanks a lot for that, Mitesh. Let's focus, I think, on a couple of those, on the tech stocks, I think so. Rima has gone across to the big wall, and she's going to run us through what's going on today and why particularly these stocks have come in for a bit of a knock. Rima, take it away.
Thanks so much for that. The sell-off continues to deepen. The NiftyIT Index is now down more than 20% in the month of February, putting the index on track for its worst monthly fall since 2003, April of 2003. Year-to-date, heavyweights have taken a very sharp hit. TCS Infosys down close to about 20-odd%, Wipro 24%, HCL Tech is down about 17%, Tech Mahindra is lower by 15%. Here you've got some valuation comfort. Look at mid-cap names, large mid-cap names like a Persistent, 26% down, LTM down 25%. And several names now are trading at their 52-week lows. Just putting out a few, but you've got a TCS, Infosys, Wipro, HCL, Hexaware, Cyan, Tata Tech, First Source. These are all companies which have hit fresh 52-week lows today. The narrative is the same. Will AI replace IT software and services companies? And yesterday, it was IBM, which saw its biggest single-day fall in the last 25 years, down 13%, as Claude released an update which can modernize COBOL. And Indian IT companies do play a role in terms of COBOL maintenance, application, and some modernization work. But, despite the sharp correction despite the sharp correction, IT valuations are at 16, 17 times more expensive than global peers like an Accenture and Cognizant. But the opinion that we're now getting is that the sell-off may be overdone. Let me take you through a global HSBC report. And they say that foundation AI models are not suited for lift and replacement of major software platforms. There are limited use cases of that where you can simply lift and replace it, like for an image creation program, for a small software app. But it is not realistic to expect it to do this at an enterprise level for enterprise software, which is far more complex. And therefore, they see actually software companies to be beneficiaries, because if enterprises need to unlock the full potential of AI, you will need these enterprise companies. There is Sandeep Agarwal of Suvilo, and we've been chatting with him for the last so many months with this derating in the Indian IT companies, and he's always been bearish. But today he said 70 to 80% of the pain may be behind us. We also chatted with Kawaljeet Saluja of Kotak Institutional Equities. His view is that the sell-off looks overdone. Markets are pricing in barely a 3% long-term growth to perpetuity for some of these large-cap IT companies. He believes there is value at the juncture. He said the risk right now is the timing gap, because at the moment what you are seeing is deflation fears, which is directly impacting revenues. But the future demand, the new opportunities due to AI are still yet to play out. So, Kawaljeet believes the problem is the timing gap. Back to you.
All right. Thanks a lot for that, Rima. Well, earlier on Finding Alpha, I caught up with Abhishek Bhandari of Nomura. He gave us his bull as well as his base case scenarios based on revenue growth. He also shared his top picks. Let's listen in.
If you look at the bear case, which is the topical theme in the market right now, the bear case is this company's business model becomes obsolete. they're not able to replace the deflation in revenue with a new stream of revenue on AI, and they struggle on growth. They may possibly have a negative growth, or in the best case, very early single-digit 2 to 3% growth. They keep margins stable, by optimizing on their workforce. You will work in a scenario where the EPS growth becomes zero or close to, -1, -2%. Now, those kind of companies, X growth, in our view, could trade at 10 to 12 times.
Okay.
That's the extreme bear, assuming these business models will become extreme. The base case is, the IT companies, I would say, adapt themselves, which they have done in the past tech cycles. Right now, we are going through the valley, as I call it, where the deflation of revenue is hitting first. The ascent into the mountain, which is the AI-led revenue, is taking longer than expected. But it will come. Ultimately, the AI models have to get monetized. If somebody has to monetize the model, somebody has to implement the model. And the implementers are nothing but the system integrators, which are the IT services companies. In that case, I think the growth will come back towards mid to high single digit in the range of 5 to 7, 5 to 8%. The bull case, is the IT companies pivot completely from just being, service providers to become value creators. What I mean by that is, the service model changes from labor, intensive work towards more like a platform, where the company starts selling services as a software. This is, I would say, a low probability event right now because we don't see too much of evidence of it right now. But if this were to turn out to be true, you could see a lot of non-linearity in revenue and the margins, and the multiples, in that case, could range even up to 30 times, for the good large cap IT companies. I think in the large caps, we like Infosys and Cognizant the most. We think they will continue to gain market share. They'll grow at a rate which will be higher than the peer average. Okay. In the mid cap, Coforge is the preferred pick. We think the company's ability to deliver mid-teens growth exists. Mm-hmm. And some of the large recent acquisitions, will help it become bigger in size and get access to more number of clients, the relevant ones. On the small cap, we like eClerx the most. It's a BPO company, but I would just like to clarify here the perception that BPO companies will all get disrupted, which is true partly on the BPO, voice side. Mm-hmm. The voice component for eClerx is quite low, is below 10%. So I think they will be a beneficiary on the platform side of the BPO, and we see them sustaining close to 15% revenue growth in the medium to long term.
Interesting one. Top picks, Infosys, Coforge, as well as eClerx, and giving us various scenarios in terms of growth and what multiple they should get. Dharmesh Kant, Head of Research, Chola Security, joins us. Dharmesh, what do? You wake up every morning, bad news for tech, and the stocks get slammed. I don't know whether, you could give us your view, actually. Is it time to actually sell some of these stocks, try to prevent further losses, or do you think it's got too exaggerated on the downside? Time to actually dip in. Your take?
Yeah, Dr. Nigel, thanks for having me for the show. I mean, the tech space, barring, tactical plays in between. So the view remains the same. I mean, most of the people now are pricing in technology stocks based on terminal growth rate. So 3 to 5% if you're assuming a growth rate going forward. So that's basically you are trying to arrive at intrinsic value based on the current balance sheet and the size of cash which is sitting on the balance sheet and terminal growth rate. So to my mind is that next 2-3 quarters will definitely be good because the committed business will flow in. But 27, 28 onwards, you will see this difficulty of deflation and lesser operating margins, depletion in the operating margins playing out because value creation for the services being offered will be done by AI, and we will be more of a system integrator kind of a play. So that is the challenge which IT companies are facing. If there is any tactical bounces, the idea is to sell off, barring we are bullish on one stock, that is Orient Pro Solutions Limited, for IT for quite some time.
Okay, I think you just mentioned that you like Orient Pro Solutions. Okay, all right. And from the frontline names, we didn't get, if you like any of them, Infosys, there's a valuation gap out there. As you said, there'll be various needs of Indian tech companies, even in the post-AI world. In case we missed a name, or you just like Orient Pro itself?
We are only liking Orient Pro Solutions, so that being a product company, it's an individual stock picking bottoms-up approach. Otherwise, largely, be it Infosys, TCS, or any actual tech, things will be difficult for them going forward. I'm again saying next 2 quarters will be better for them because of the committed business which is already there in place. But going forward, the traction will shift to low single digit kind of a growth, maybe 2% or 1%. and that too helped by currency depreciation, is again relative from you're valuing what and for what the valuation is there, what kind of a growth rate we are talking about. Historical is history, that's a resetting has happened. And Raja, I will give you one more perspective. FY19, Nifty 50, the IT company's total PAT was around 70,000 odd crores. FY25, these Nifty 50 components of IT companies delivered a PAT of 110,000 odd crores. So the weightage reduced from 21-22% to 12% as we speak. So that's been reflected. Anthropic came now, but last 4 years they have been struggling to come to a growth return. So that's for the challenge with IT companies. And I think I'm afraid we are late in addressing the challenges.
You know, there is this audio issue which is coming back. Dharmesh, we'll just try and fix it, right? And come back to you. But just want to play out this exclusive chat we had with Rajiv Bajaj, Managing Director of Bajaj Auto, one of the most well-spoken CEOs, and just sort of explaining very simply what he expects exports at Bajaj to really be at. And there is a little bit of conversation around the electric two-wheeler production numbers as well. Listen in, and we'll come back with Dharmesh.
Exports has been our most standout vertical over the last quarter. As you mentioned, after a long time, we crossed an average of 200,000 vehicles per month. Biggest market, Nigeria, that used to average at its best 60,000 a month, had gone to zero. And now back to 30,000 a month consistently, and I believe looking at 35, 40,000 a month in the near future, doing very well this month. Despite a shorter month in that sense, this quarter we will still finish at 600,000, having done 215,000 in Jan. We are set to repeat that number this month, and then the balance will come in March. But from first quarter of next year, we should certainly be doing better. I am hopeful that with the spillover from March into April, we should be edging towards 250,000 in April. We have now stabilized at about 30,000 vehicles a month, having overcome the supply chain issues and other operating issues. And our capacity will be up to 40,000 across the supply chain from April. So that's what we've set our eyes on as the next target.
Okay, we're trying to fix that, as Rajiv Bajaj is trying to fix that audio issue with Dharmesh Kant. We'll try and do that in just a bit. Mitesh is with us still. Mitesh, the number one volume-led loser is Eternal, is down 15 bucks. 250, 253. Any thoughts on this one?
Eternal, on the screen, a stock which is corrected along with Swiggy, and the last time the stock corrected, we had a closing low of around 254. It's right there actually. It's also a weekly pivot, and if we start breaking through that, I think this correction could even extend about levels of 235 to 236.
Any thoughts on InfoEdge, Naukri? One way kind of fall, right? I mean, yes, from 1,400 about a month ago to 1,000 bucks.
That's right. In fact, Naukri had very strong support around this 1250 mark. And if you look at the last 6 months of data, I think about 6 or 7 times this 1250, 1270 range came into play, and now it's broken. It's done the target which I was looking at, which is around 1050, but the next support pivot, if I can mark it on the chart, is around 980. So maybe some more decline still left. It's extremely oversold, so around 980 I would expect that some kind of corrective, movement could happen, corrective pullback could happen on the upside.
All right, one more quick query with regard to HUDCO. You had a sell call out there, but that is only for today because it moves out of the F&O from effective today itself. So you're seeing weakness on that counter, right?
Correct.
Yeah. I'm just looking at some of these rates, right? I mean, this is eye-watering. Look at car trade. Car trade, if you can pull it up, was 3,300. Maybe just put all these charts up for the year, say over the last 1 year. High was 3,300, and it's basically fallen whatever 40%, right? So 1,800 rupees now on car trade, looking like strong momentum names and looked like a one-way kind of price action. Look at something like a Ixigo. Ixigo was 340 bucks. It's halved, 160 rupees now. So this is like, just incredible amount of damage across the board. And some of these, of course, I mean, things like Ixigo, again, the fear is that all this AI-related development will eat in, and started in the US and Make My Trip, etc. Saw similar corrections. It's, of course, shown up here in a big way as well. Mitesh, thank you very much. We'll come back to you with more questions in a bit. Dharmesh is with us. Dharmesh, sorry, just finish what you were saying because the line was a little bad, but I think now we got you on a solid one. Just finish that last point you were making.
Yeah, Prashant. Doctor, so we were talking about the technology stocks and what is the difficulty I find out there. So the last point which I was making was Anthropic came now, but if you look at the Nifty 50 constituents of IT stocks, in FY19 the total aggregate earnings was 70,000 odd crores. FY25 it ended with 1,10,000 odd crores of net profits. So the weightage came down from 21% in the Nifty 50 basket to 12%. So there was a problem already there. They were struggling with the growth momentum. Narratives kept on changing. First, it was interest rate cut, then the discretionary spend, and the pickup in new softwares which they were developing for the AIs. But now I think it's a bigger challenge for them because they will now be just a system integrator, and the value addition part will evaporate, and that will lead to bleeding in the margins. So what we are valuing IT companies now is on the basis of terminal growth rate, and if that is what you are paying for, then I think further downside is there for the IT companies. Next 2-3 quarters may still be good because of the committed business which will pay out, but the real challenge and problem will start from FY28 onwards.
Okay, all right. Dharmesh, thanks a lot for joining in, Dharmesh, giving us your view.
Nigel, one more question. Dharmesh, just, this, I was talking about Ixigo, right? Things like, again, it's not IT services, but these are platforms where, the first leg of sell-off started in the US because, people hypothesize that maybe Google, you'll be able to, you want to book a hotel, Google will help you with that. So, and that's the first leg of the correction. Now, of course, you've got these agentic applications, etc., which are the pain point here. Look at something like a physics wala is the other one, which is, of course, a recent listing, completely bombed out now. Again, here, incredible amount of advances. You're talking about, I was looking at a blog, I think it was Anthropic, or I think one of Google Gemini it was, talking about, the full IIT JEE examination papers, corrections, everything available for free on Google Gemini. And of course, there's of course the course, etc., which is also anyway there. So I'm not sure. Any thoughts, Dharmesh? Have you thought about these areas? This is not IT software, but these are all AI casualties in that sense.
Yeah, Prashant. The disruption is very disruptive and very fast. So what used to happen earlier was if you're an early bird with a new technology or a platform or an application, and there was challenges because other people could not develop them. Copying the same platform application or technology would take time, and that is why we gave humongous valuation to all this new age kind of a company, the so-called new age companies. What has happened now in the disruption which I see playing out will be this agentic AI will make it very cheap and as you are saying, maybe a free evaluation of everything. Then what's the difference? Why will someone pay for services which is available at free and are much faster and a better pace? So this disruption.
But let me Dharmesh, let me allow a counterpoint, right? Say you want to order food, right? Eternal is also selling off because of these fears. Now you can use agentic AI and you tell him that, okay, I want to order this food. It'll search across platforms, look for the best price and tell you. But the point is, it's got to connect the last mile, right? It has to tie up with restaurants. There has to be a rider which will get the food to you. Creating the app is not the moat here, I'm assuming. It is essentially managing the entire back end of it, which is the real trick, which is where companies like Zomato, Eternal have excelled. So is it so easy to replace all this?
No, Prashant, it's not easy to replace that. You will need people to do the groundwork, and the ground job has to be done. The endpoint delivery, the human part of the work will always be there. But what it will eat out is the margins which you used to take for being only few players in the market who are doing the same kind of a delivery. So, I mean, if you are giving, say, a payout to a gig worker, and this payout can go for a disruption and for a competition out there, huge amount of money is chasing the entire market. So, and they're already working at wafer thin margin, 2%, 1% kind of a margin is there. So any hopes of getting to 4.5 to 5% is being ruled out. Now you have to contend with 2 and 2.5% kind of a margin. So we are seeing the competition and the kind of equity inflows is there. So the limited point is, I mean, human work will still be there where you need a rice mile connect. But the margins, because of the technological advantage which you are having, will go out of the window. That won't be there. In fact, it will become more cheaper and more competitive.
Okay, great. Dharmesh, thanks a lot for joining in and giving us your take on the markets and a couple of those stocks as well. By the way, Centum Electronics, they're bagged an order from HAL. The stock up closer around 4% as we speak. I think the last 6 to 8 months, the stock I think has moved very swiftly from 1,500 to around these levels of around 2,500. It saw a sharp correction and now it's pulling back. So keep an eye out on that particular name. A quick word on the metal index. It's not the heavy lifting index, but the metal index has now moved to the high point of the day. And I tell you what, ferrous, actually this quarter could look quite good because of the price increase that have come about. China is producing less. And in all, you're seeing some operating leverage as well playing out. So that's the index to track. Slip into a short break, come back. Pashupati Advani will be joining in of Global Foray. Stay tuned. Well, markets doing a thing of their own. We're 100 points off the lows of the day, which is good. And we're getting into final expiry hour. So let's see how that goes. NTPC is the stock that spiked up from the frontline names. Pull up the individual chart. Some of these stocks will start moving as the rolls take place right now. NTPC, boom. But Hormuz is the guy. He puts the spotlight on all the big movers. Hormuz, tell us today it's an exciting bunch, I believe.
Indeed, and that's what the kind of market has thrown up, right? And beyond all the IT names that we've been talking about, the one name that has taken a bit of a backseat is L&T Tech, LTTS. That is among the worst performers on the IT sell-off today. 8.5% lower on the stock now, the biggest single-day fall since March of 2020. And this is turning out to be the second straight month that the stock has had double-digit losses. The last time something like this happened was way back in 2022. Now, today's session, over 4 lakh shares have been traded. The 20-day average is around 80,000 shares. And out of these 4 lakh shares that have been traded, close to 60% have been marked for delivery, at least as of now, is what the data on the NSE is showing up. And L&T, being the promoter of the company, that the sell-off that you have seen since the start of the year, the stock is down almost 30%, as a result of which the value of L&T stake has declined by over 12,000 crore rupees so far. Now, Eternal is the other one, is among the top losers on the Nifty today. The 6th straight day of losses for the stock, 5% lower here today. The market cap has now slipped below the 2.5 lakh crore rupee mark. And in the last 10 trading sessions, the stock has gained only once, sometime in between last week. And since then, it's been on a losing spree. The stock is among the most traded today on the Nifty 500. 6.5 crore shares have been traded today on Eternal, the 20-day average being around 3.6 crore shares. And even here, close to 60% of those shares are marked for delivery. And even on the F&O side, the premium on the 260 put option has gone up by almost 87%. That's for the March series is what I'm talking about. That's gone up by almost 87% in today's trade. The HAL, we were talking about this in Bazaar this morning, that holding 4,000 is very crucial for HAL. It's now below those levels for the first time since April of last year. Is the second straight day of losses, but mind you, today's fall is on volumes that are less than half of the volumes that were seen yesterday. Now, yesterday's session we saw close to 40 lakh shares being traded. Today's volumes are even lower than the 20-day average. 13.5 lakh shares have been traded so far on HAL. The 20-day average is 20 lakh shares. So fall on insignificant volumes, and even these insignificant volumes, around half of those are marked for delivery. And here too, the premium on the 4,000 put option is up around 20% for the March series. And among these sea of red, there is one name that has done well through the session, and that is Vishal Mega Mart, which is doing well. Is the second straight day of gains for the stock, still holding on to a 3% advance. The volumes are at the highest in the last 1 month. Close to 2 crore shares have been traded today on Vishal Mega Mart. 63 lakh shares is the 20-day average. So almost around about 3x the 20-day average on today's volumes. Close to 40% of these shares have been marked for delivery. The stock did well after its listing. The post-listing high is 157, which is exactly 100% from its IPO price of 78 rupees. But from those levels, the stock is down 21%, but one of the top among the outperformers in what has been an otherwise red screen.
All right. Thank you very much for that, Hormuz. So interesting set of stocks as always. Pashupati Advani is with us of Global Foray. Pashupati, good to have you with us here. Thanks for joining in. I don't know if you got a chance to listen into some of the early discussion which we were having with Dharmesh Kant. And I was asking about all these companies, not just IT software, but across the board, where there is these. I mean, it's almost markets in a bit of a deep anxiety, right? What all this is going to do. There's something like a physics fella selling off. There is a OTA platform like Ixigo, which is down sharply, it's halved basically from the highs. And so on and so forth. Eternal, for example, food delivery. Just your perspective. I think there's only one conversation to be had. Go on.
Well, I've been saying for the last God knows how long about what was happening in the IT stocks and the fact that we were not able to move our business models fast enough. So obviously those stocks are down a lot, and particularly since Anthropic dropped the bomb last weekend. About Claude being able to, you saw what happened with Anthropic and IBM. They just announced that they'll be able to redo COBOL, and IBM lost 33% and some $30 billion in one shot. So, I mean, those are scares, but these are the realities of what AI can do. The question is how long it's going to take and who's going to actually do it. But the reality is it is capable of doing these things. And we are seeing the brunt of it because all our big IT names, whether it's TCS or Infosys or, HCL Tech, are all getting the brunt of it. They're all down. They've not yet found the solution, how to get back more business. And they've been skating giving guidance, but the guidance seems to be not there. And certainly with the immigration policy in the US, and also general cost cutting across the world, and AI coming in, the combination is hurting them in all directions. So they have to be reevaluated. And they are a big part of our index, which is why they're also taking the index down with them. That being said, there are obviously things that we can look for, but I'm also not very wild about the banking sector, even though the banking sector seems to have held up, because it's my belief that a lot of people in the IT sector have taken, white good loans and housing loans, and once they start losing their jobs, that's going to have a trickle effect into the banks. So I think it's only a matter of time before banks will also start following suit, and that's gradually pulling our market down. On the plus side, the IPOs seem to have cooled down a little bit, because obviously there's not that much demand. And that's good for the market, because it means less money is going out of the market into IPOs. Yes, Prashant.
Pashupati, just to get it correct, you're not interested in tech or even the banking names as of now, right? I mean, you don't like the top two opening batsmen. You'd rather go somewhere down the order.
Yep. So I think in that space, that obviously the government is continuing to spend. So metal, cement, those sectors are still coming in. Defense, obviously, they are spending some money there. So those stocks. But then again, you don't know where they're going to give the orders next. Today it's Centum Electronics. So tomorrow it'll be something else. So to be able to pick those is the key. But the defense sector is getting some business, particularly since we are committed to buying weapons from all over the place and tie-ups for those weapons, and some sort of trying to have exports basically also based on those defense. There's some word for it which escapes me. They've got to give some export commitment against the technology. So all that is happening, but you have Mr. Trump on the TV right now in the other box. So I think he's the one who's moving the world, and he's moving us with him.
Where is he now?
He's sleeping.
He should be asleep.
He's snoozing, I think. So there must be a recording. Let him rest, Pashupati. He requires some rest, No tweeting and too much of action from him is okay.
6:30 a.m. on Truth Social. That's where you'll see him. 6:30 a.m. Eastern.
As someone said, that he's built different. Doesn't require very much sleep or food or, So, anyway.
I think he's enjoying himself. He is enjoying himself. He is having a ball. Okay, there's no question about it. And
I don't know anymore. Approval ratings of 32%, midterms coming, bit of political backlash from Republicans. So he was enjoying last year. Now I'm not so sure. But that point that you said, the dominant driver, Pashupati, is it? I don't think Trump and what he's doing is the dominant driver anymore for financial markets. It's this AI-related anxiety, isn't it?
No, for sure. I mean, AI-related anxiety is driving it. But I mean, again, even on the other side, which is textile exports, stuff that we've been sending into the US. The only thing that is up this year in terms of exports is cell phones. And, Apple, I guess, has been a big part of that. But how much of that is real export and how much of that is just, assembly and a little bit of a little bit of value add is good. But it's a huge number. I thought I saw a number which was like 23 billion or something of exports of phones this year. So that's a lot.
Pashupati, just two ideas before you go. Two nice ideas.
Yeah.
Two stocks that you have recently bought and you believe they're good for more. Please go ahead.
You're really putting me on the spot here, because
One, Pashupati, go for it.
So no, honestly, I'm actually a little bit. I'm going to change the subject slightly, and you can get angry with me for it. I've seen this new thing on the government trying to call back the gold bonds, because obviously they've become very expensive for them, because they were issued when gold was at much lower levels, half of what it is now. So they're obviously hurting because they have to pay them back. So they're trying to call them earlier. And and one of the things, they've done some switching, in the sense that if you bought in the secondary, you don't get the same tax treatment. Gold still seems to be chugging along upwards, but I think the tax treatment on gold in India is going to hurt people and maybe get some people to sell. So yes, I think I was fortunate enough to buy some gold stuff, some of the bonds particularly, till they stopped issuing them. So I'm trying to figure out what's happening in that, because that's been announced, but there's nothing being talked about over there. and as to what's going to be the treatment for the bonds, except that they took away the tax holiday if you bought in the secondary market. So that's a bit of a challenge. Regarding other things, I mean, there will be a turnaround at some point, but I still feel that there is going to be consolidation in cement. There's going to be consolidation in metals, and I think those are where the places to be, and particularly the sort of different metals, not the steel, more like aluminum and maybe I don't know which companies are in rare metals, but those are the ones also to be looked for and searched.
Yeah. Oh, all right. Thanks very much, Pashupati, for that. Appreciate your time here. Have a good one, and talk to you soon again. Well, I think we'll talk about chatter, right? What's on the chatter list? Let's get an overview first. Nimish is here with what he's picking up. Nimish, take it away.
Hi, Prashant. Another down day and another very bad day for the IT names, right? The IT index is down another 5%, massive selling. My sense is there is a lot of institutional selling in the IT stocks, even in today's market. So the FI number may look large, but that's largely because of aggressive selling in the IT names. Now there are fears of the IT impact into other sectors as well. So consumption is down, the real estate sector is down. The last one I checked, the real estate index was down nearly 3%. So it's not only left to IT now, but spreading to the fear is spreading to the other sectors as well. So that's a broad sense. As I said, the institutional number may look large, but that's largely because of a couple of sectors, including IT and the platform businesses in today's market. So we've broken some crucial technical levels as well. Need to see. We've seen a small pullback in the last 30 minutes of trade, but could be just a tactical pullback. But broadly, the sense is the sentiment is very weak now, and especially for IT names, it's largely a sell from large institutions across the board, whether it's domestic or the FIs.
Yeah. What are the stocks, Nimesh, on the list today?
Well, a couple of interesting names, Prashant. So the first stock is Blue Jet Healthcare. The stock is buzzing in the last couple of days. Yesterday, the stock was 10% higher. Today, the stock is up 5%. But having said that, the stock has actually fallen almost 60-70% from the recent peak. If I'm not wrong, the QIP was done by this company at 900 rupees, and the stock had fallen to almost 320, 330 level. So, been a big damage there. But in the last couple of days, I understand at least one large AIF has been a buyer, and that's why there is delivery-based buying happening, and the stock is buzzing in a weak market. So that's the first stock. The second name is Rallis India. Again, it's been this quarter numbers were good, but the stock has actually come off from those highs under pressure of late, largely on the back of overall selling in the broader markets. But the street is anticipating some corporate development in Rallis very soon. Remember, it's a Tata Group company, and Tata Chemical, the listed entity, owns close to 55% stake in Rallis India. The third name is E2E Networks. Again, an extremely volatile stock. We've seen 20% up one day, then 10% down the second day. And I believe the management was in town in the last couple of days, and there could be a QIP in E2E Networks very soon. A small QIP, close to 400-500 crores is what my sense is they're going to raise in this QIP. And the last is Urban Company. Again, under pressure, part of this whole IPO stock which are under pressure of late. But in Urban Company, my sense is there could be a large block deal very soon. A non-promoter entity is likely to sell, so it's not that the promoters are going to sell, but some larger funds are looking to sell a large chunk via block in Urban Company.
Right. Got it. Okay, all right.
Just one thing. UPL we discussed yesterday as well, right? Yeah. Anything new, anything else? Big correction yesterday, down another 3% now. You were saying that perhaps we need to wait for the finer details, etc. But are you hearing I don't know, is there a rethink of sorts or on those lines, anything you're picking up?
Not sure. Not sure, Prashant. So, if you hear the Kotak analyst yesterday at the conference, he was very clear. He's mentioned the note as well that there is a holding company discount now. That's a big fear. Now, whether they will reconsider that particular decision and give the shares of the demerged entity UPL SAS to the investors, that's something to be known. That's again a bit of speculation. But I guess what the street would be anticipating and watching out for very closely is the valuation reports across all the three businesses as to how they are valued at and what's the valuation that they are putting in that report. So that's something to watch out for. It's going to be officially announced in the next couple of days. That's something which they have disclosed in the press release as well. So in the next couple of days, you'll hear the valuations and all for all these companies in the official release. But beyond that, I guess the street is fearing that while it's a good deal or whatever, there is a holding company discount in the very near term, and that's putting pressure on the stock.
Nimesh, any sector, theme, etc., which is hotly debated as an attractive area at that conference? the time that you've spent there?
Prashant, it's only IT which people are talking about. So IT and IT related sectors. So that's been a big pain point for all the investors, right? I mean, whether you're running a IT fund or a flexi cap fund, there is an IT exposure, platform business exposure for sure for all these investors, right? So it's been a pain point, and that's been a big talking point as well. In fact, I got a very interesting feedback at HCL Tech management at the quarter conference today. The first time they did mention that yes, we were behind the curve, we should have invested more in AI and other stuff. And now at least, there is a bit of recognition from the companies as well that yes, we have been slightly behind the curve, and maybe we'll have to up this ante in terms of investing in R&D and in AI as well.
Yeah. I think it was the HCL Tech management yesterday, because I think we had someone join us from there who said, who told us that he heard the HCL Tech management kind of sort of reflect that. No, absolutely. Thanks very much, Nimesh, for that. More later. So that is the D Street chatter today. We'll take a break. We're back with some short-term trading ideas with Mitesh on the other side. I think there is 15 minutes to go for market closing. Okay, welcome back. Well, we got Mitesh back with us with what he wanted to do in terms of short-term ideas. Mitesh, anything on your list?
One BTST and one STBT, Prashant. IOC, I think, in a weak market is holding out very well. The pattern is good as well. So take a BTST here with a stop just around 178.75 and a target of 183 half for tomorrow can be looked at. While ICICI Bank, and within the banking space also, the private sector banks are slightly underperforming. So ICICI Bank is having a slight negative kind of a move on the hourly and 2-hourly chart. So STBT here, keep a stop at about 13.95. Look for targets of 13.70, 13.65.
Got it. Okay. All right. Thanks a lot for that, Mitesh. Well, IDFC First Bank has put on the exchanges that even though there is an investigation that's underway, they have paid 100% of the principal as well as interest to the Haryana government as of now. The 500 and I think 90 odd crores is what they're saying they're paid. And that's why the stock had a bit of a spurt from the day's low. We had the Haryana minister that's saying first that all the money has come back. And that's because IDFC First Bank has made that good, though the investigation is underway. But let's focus back on tech, because that's the big burning question right nowadays. What to do with tech? Well, Yash is giving us another angle. He's breaking it down how IT rout is affecting FPIs, mutual funds, and insurance space. Yash, take it away.
Well, if you look at these three large categories of investors, FPIs, mutual funds, and insurance companies, just alone in about the Nifty IT constituents, these three category of investors together have lost nearly about 2.5 lakh crore rupees. If you have to break it down in terms of individual categories, FPIs have lost more than 1.1 lakh crore rupees. The value of holding is down about 21% on a year-to-date basis. Mutual funds have lost over 74,000 crore rupees. The value of their holdings is down 21% again on a year-to-date basis. Insurance companies, they've been one of the large investors when it comes to IT stocks. They've lost more than 60,000 crore rupees, and their value of investments is down about 20% on a year-to-date basis. Now, important and an interesting figure, out of the total 60,000 crore rupees lost by all insurance companies put together in this big IT fall, LIC alone has lost about 42,500 crore rupees in the IT index constituents on a year-to-date basis.
Thanks a lot for that, Yash. Well, let's welcome Jay Bala, cmtcashkiosk.com. Jay, on the tech index, let's get it out of the way. How low can we go?
Hi, Nigel. I pointed out last week that if it were to break 30,900, it has bottomed all the way to 26,000. So there's no interim support beyond 30,900. So today's break below that, even if it's on intraday basis, that's not a good sign.
Okay, 26,000. So another, closer on 15% even from here is what we could drop, correct?
That's right, Nigel.
How much pressure is it going to put on the Nifty? Actually, the Nifty has been very resilient, Jay. Imagine a month where you have the tech index down close to 20% and the Nifty is still holding its ground. Pretty impressive, I would say. That's because the Nifty Bank Index has been doing that heavy lifting, and Reliance Industries as well. We saw in the last few minutes as well, that one has spiked up. Where is the Nifty headed? Go and test the recent low and then pop up?
That's right, Nigel. Nifty IT could be probably trying to play a spoil sport to a bullish view. Still, the markets are managing to hold above the critical 25,148 level that I pointed out, and but the price action isn't that encouraging. But let's see if Reliance and banking sector can outlast what the Nifty IT index is trying to do. Maybe some other sector needs to join these two. Probably Nifty Auto and Nifty Defense are on my watch. But if 25,148 were to get printed even on an intraday basis, I would go back to my earlier view that the markets are first heading to 24,000 and then coming back to 29,000. So the short term could get choppy if could get negative if 25,148 were to break. So long it's comfortably holding about it. There have been 4 sessions that's been supporting 25,300. So we'll watch 25,148 as a very critical support.
Got it. All right, Jay, I think we'll try to fix that line. We'll take a snappy break, come back, get your views on the other indices as well as individual stocks. Stay tuned. expiry is playing out, but keep an eye out on the bottom of your screen. You have the Tata Sons board meet that's currently underway, and there's no decision on clearing N. Chandra's reappointment as chairperson as of yet. So there was some speculation doing the rounds. So we're just trying to clear that point. As of now, there's no decision that yet be taken. We keep getting you updates on that front. Getting back to the markets, though, we've seen a bit of recovery from the low point of the day. We're 120 points off the lows. And there is a recovery in individual stocks like Coal India, Adani Ports. Both of them have seen a bit of a spurt up. And even in the broader markets, not expiry related, but development, that stock is now up close to 13%. 25% for the week itself. So big move is what we're seeing on development. And Vedanta's the other one. Yesterday, there was some speculative news about some guidance cut. We at CNBC-TV18 had done a quick check and there wasn't any big matter to that. Stock had corrected intraday. I think the shorts got trapped out. That's why the stock again has moved up. But Jay Bala of Catch the Chaos is with us. Jay, let's keep it simple. You believe that the Nifty is going to, visit lower levels and then continue its uptrend. We got that. What about individual stocks? Two ideas first.
Yeah, see, it's better off holding back cash, Nigel. And if you want to be selective about it and extremely, you have to make a trade. It can be in the FMCG names. Stocks like Britannia, Colgate, they are likely to see a short-term bounce. This is not a multi-month hold and for like an investment bet. It's a say multi-day to multi-week hold. So, I'm expecting a short-term bounce to come through in the region of 2,400, 2,600 for Colgate and fresh 52-week highs for Britannia.
Okay, got it. Tata Sons board has deferred a decision on taking the extension of N. Chandra. That's the latest that's coming in there. We'll try to get in a bite from Mr. Chandra as he steps, out of Bombay House very, very soon. Our colleague Santya is so there. She'll keep getting us updates on this front. But Parikshit as well as Shireen, that's the information that they're picking up with regard to what's flashing for you on the screen. Jay, just, since we've got just a couple of minutes to go, the Nifty Bank, I missed the level over there because that will clearly need to hold one end up, and Reliance Industries. The bulls will turn to both these two since the IT stocks are in a flux.
Yeah, Reliance, it cannot afford to drop below 1380. It's a very important support. And when it comes to Nifty banking, the upsides are getting quite limited. But, it's reasonable. It's not yet done, I think. The 63,000 is the resistance for the Nifty banking index. And as long as the sector can hold about 57,500, I don't think it's getting into trouble.
Okay, 57,500, and that's on the Nifty Bank. And on Reliance, I missed that level?
1380.
1380. Got it. All right, Jay, short but effective chat. Thanks a lot for joining in and giving us all of those details. Well, let's wind down the markets. It was a tough close to the February series, which wasn't so bad. Though it was really bad for the NiftyIT Index. That lost close to around 20% in this series itself. In today's trade, though, the Nifty actually came up 120 points from the day's low. And that was the point we were making at the start of the show as well, that we could expect a bit of a swing. That's precisely what's happened. So a big swing out there. It's actually 25,450. That's the rate on the screen. Individual stocks, Tech got pummeled in today's trading session yet again. Tech Mahindra, HCL Tech, as well as TCS, both of them under pressure. The problem was even a stock like L&T that is actually holding quite strong for the last few days. That stock, in fact, did come in for some profit taking. Trent as well, the stock is half from the top, but that as well did take a bit of a knock. What did well? JSW Steel was up, Coal India was up, Hindalco was up, and NTPC. It's a pity that the metal index doesn't have too much weight. Otherwise, that could have held one end up. From the broader markets, individual stocks were doing a thing of their own. There is a fear with regard to stocks like Physicswala, as well as Eternal, as well as Ixigo. What's going to happen to their business models? So for the time being, those stocks did sell off in trade in today's trading session. On the flip side, development did well. You had Blue Jet that was up and about in trade today, as well as Bank of Maharashtra. All those stocks did pretty well in today's trading session. And you had the number of stocks advancing, close to around 1,000 in comparison to around 2,000 stocks that were declining. Not too bad on that front as well. But I think my colleague Parikshit Luthra is joining to get us the latest from the Tata Sons board meet. Parikshit, take it away.
Well, yes, this was a very important board meeting at Tata Sons. It was taking place in Bombay House sometime after 11:30. So you had all the board members, Noel Tata, N. Chandra, Venu Srinivasan, Harish Manvani, Anita George, Siddharth Sharma, all of them were present during this board meeting. We hear that Noel Tata had disagreed with or raised certain concerns about the reappointment of N. Chandrasekaran. So there was a disagreement about the reappointment, because of which a decision has been deferred. We'll get to know very soon whether it has been deferred till the next meeting, but this meeting was very important to build consensus on that. We believe that all members were on board with the decision to reappoint N. Chandrasekaran for another 5 years, but there was disagreement and certain concerns, certain issues raised on the part of Noel Tata. Let's see what happens, but he was supposed to get a 5-year term extension. Many thought that this is taken for granted. It's bound to happen. But clearly, there was certain issues raised regarding losses in certain Tata Group companies during the meeting.